네, 계속해서 저희는 산업 세션 두 번째 발표로 이어가 보도록 하겠습니다. 두 번째 발표는 세계적인 금융 서비스 기업인 S&P 글로벌 마켓 인텔리전스에서 수석 애널리스트로 근무하고 계시는 앨리스 윤님의 발표가 준비가 되어 있습니다. 오늘은 리튬 및 코발트 등 배터리 광물 현황 및 전망이라는 주제에 대해서 발표를 진행해 주시겠습니다. 앨리스 윤님께서는 S&P 글로벌 그리고 모간 스탠리 등에서 오랜 시간 자원 애널리스트로 근무하고 계시면서 또 최근 5년간 리튬 및 코발트 분야에 집중해서 분석한 내용을 오늘 여러분께 공유해드린다고 합니다. 유익한 내용이 준비가 되어 있는데요. 여러분 계속해서 화면으로 함께 보시겠습니다.
Hello everyone. Thanks for joining the seminar today. This seminar is presented by S&P Global Market Intelligence in collaboration with Career Resources. The presentation topic is Industry Current Trends and Forecasts on Lithium and Cobalt. My name is Alice Yu, and I'm the Senior Research Analyst from S&P Global Market Intelligence. I'd like to thank Career Resources for having us to present in this seminar and their commitment to deliver essential information through this seminar series to the Korean metals and mining sector. S&P Global Market Intelligence provides comprehensive end-to-end intelligence on the mining sector, covering over 3,600 mining companies, over 3,500 mining properties. 15 commodities are covered by My Economics cost curve models and data sets, as well as over 20 years of exploration budget data. This may form into one of the most extensive data sets in the industry. For the presentation today, I'll be speaking for 15 minutes, starting off by giving an update in plug-in vehicles market in China and the European Union, our demand and supply outlooks for lithium and cobalt, their recent price movements, trends in financing flows, and the market balance and price forecast. I want to clarify at the start that our definition of plug-in vehicles includes battery electric vehicles, or BEVs, and plug-in hybrid electric vehicles, or PHEVs. In Europe and China, policy support for plug-in vehicles remain a dominant driver for sales. We have seen better sales performance in the European Union this year compared with China on a year-over-year basis, despite the fact that China's economy recovered more quickly from the impacts of COVID-19. In July, China's new energy vehicle sales, or NEV sales, increased for the first time this year on a year-over-year basis by 19%. However, China's average NEV penetration rate is lower and only averaged 4% in the first 7 months, compared with 5% in the same period a year ago. The year-over-year sales increase in July also benefits from a low base in July 2019, when sales plummeted as the subsidy transition period ended. While the EU saw a 78% year-over-year increase in passenger plug-in registration in the first 6 months, with average penetration rate increasing to 7%, compared with 2% penetration rate a year ago. We estimate the EU's June passenger plug-in vehicle registration has recovered and surpassed February's pre-COVID-19 level. Back in China, we have seen hints there could be further policy support for NEVs. In August, the vice head at the National Development and Reform Commission encouraged NEV purchase subsidies and the relaxation of NEV purchase restrictions in the interview with state media. In China, local government NEV subsidies were phased out in July 2019, but there have been other localized incentives for NEVs, especially since May of this year. Hainan introduced a provincial NEV purchase bonus of 10,000 RMB per vehicle, starting from June the 23rd until the end of the year. Beijing is also increasing the NEV sales quota for families by 20,000 vehicles this year, from the previous annual quota of 54,200 vehicles. Although these incentives are relatively small when compared to a total passenger plug-in vehicle sales of over 1 million units in 2019, Sales this year in China could be significantly boosted if there is further coordinated policy support. We expect passenger plug-in sales in the EU to increase 52% year-over-year this year to 682,000 vehicles. The increase is due to tighter vehicle CO2 emissions rules, increases in plug-in vehicle subsidies in France and Germany, and strong performance in year-to-date sales. While we forecast China's passenger plug-in vehicle sales to decline by 18% year-over-year to 875,000 vehicles this year. This China forecast factors in our expectation of a continued sales recovery in the second half of this year. It also translates into that sales in the last 5 months of this year will account for 52% of annual sales from pent-up demand from a continued economic recovery, rise in first-time car ownership for households looking to minimize virus contagion risks from taking public transport, and sales from uploading before the current subsidy rates are scheduled to be lowered again in 2021. Due to the offsetting effect of China's sales decrease and EU sales increase, we forecast global passenger plug-in vehicle sales to only decline by 3.7% this year, with total sales reaching 2.14 million vehicles, amid a 21% decline in overall passenger car sales. By 2024, global passenger plug-in vehicle sales will increase by nearly threefold compared to 2019 and reach 6.2 million vehicles. We expect EU's passenger plug-in sales to surpass China in 2021 under their existing purchase incentives and policy frameworks. We expect lithium demand to decline 6% year-over-year to 264,000 tons of lithium carbonate equivalent this year. Demand will recover from next year. Between 2019 and 2024, we expect lithium demand to increase by 91% overall to 535,000 tons in 2024. The passenger plug-in vehicle sector will account for 73% of this increase. For cobalt, we expect cobalt demand to decline by 5% year-over-year to 125,000 tons this year. We also expect demand to recover from next year. And between 2019 and 2024, we forecast cobalt demand to increase by a total of nearly 50% to 195,000 tons in 2024. And the passenger plug-in vehicle sector will account for 79% of this increase. The larger growth in lithium demand is due to a larger share of demand consumed in the battery sector today and the application of lithium in non-cobalt containing lithium iron phosphate chemistry, or LFP. LFPs are more widely used in passenger cars in China. It is also the top battery choice for plug-in commercial vehicles. We anticipate China's LFP share in passenger BEVs to increase from 11% in 2019 to 15% by 2024. China's NEV subsidy scheme contains minimum thresholds for mileage, battery energy density, and fuel efficiency, and in the past, automakers produced according to these thresholds in a policy-driven market. As subsidy rates decline and will eventually be phased out by the end of 2022, the share of LFP in passenger vehicles is likely to increase, mainly due to cheaper costs, making LFPs more suitable for lower-end vehicles with lower mileage and battery density needs. Moving on to supply, COVID-19 has had limited direct impact on lithium production in terms of government-mandated operation closures, with the exception of Argentina. Instead, falling prices and weak demand have been a dominant driver for supply reduction. Between January and December 2019, the lithium carbonate CIF Asia price lost 31% of its value due to oversupply, pushing producers, especially miners, to reduce production and costs through running down raw material inventories and product inventory. This was started by miners towards the end of 2019, including Pilbara Minerals' production moderation strategy. Now brine producers are following suit to cut production, with Albemarle announcing the temporary closure of its Silver Peak and Kings Mountain facilities from September until the end of the year. As a result, we forecast lithium raw material supply to decline by 17% this year to 394,000 tons. Majority of this decline is expected to take place in Australia, who accounted for around 60% of global lithium raw material supply last year, with all of Australia's supplies coming from hard rock operations that are more responsive to demand compared to brines, who have a much longer production cycle. For cobalt, COVID-19 disrupted production at a handful of nickel cobalt mines located in the Philippines, Madagascar, Australia, and Canada. We anticipate cobalt mine supply to decline by 4% year-over-year to 145,000 tons this year, due to the dominating impact of the planned shutdown at the Mutanda operation in the DRC, as well as COVID-19 related mine disruptions. Looking at the recent price performance of lithium carbonate CIF Asia price continued on a trend of decline in June-July. Price fell to $8,325 in July due to continued subdued demand in Asia, while China's domestic lithium carbonate price showed a continuous decline, including in May, as the country's plug-in vehicle sales is still recovering and due to high lithium inventory volumes throughout the supply chain. There are lags between the recovery in the global plug-in vehicle sales, which has already started, and the demand increase for lithium compound and spodumene concentrate. The lag is due to sizable inventory of lithium in the battery value chain, at a time when battery, cathode, and compound makers are looking to use up stock and limit inventory buildup during this period of falling prices and challenging cash flow. We estimate Australian miner spodumene concentrate inventory inflow has declined to 6% of production in the first half of 2020, from an annual average of 16% in 2019, excluding the Greenbushes operation. Since mid-March, concerns over supply from Africa has had the biggest impact on cobalt volumes and prices. COVID-19 lockdown restrictions prompted a temporary shutdown at Durban Port in South Africa from the end of March. Port operation has been hampered with backlogs and delays since reopening in April. Cobalt feedstock arriving in Chinese ports from the DRC in the second quarter declined by 33% year-over-year, with Durban Port being the main port for export for DRC cobalt. While in the DRC, the Ota-Contagon region has experienced 2 rounds of 2-day lockdowns in March and June. It has also been reported that 6 workers at KCC have been tested positive for COVID-19 in July. And these events add to the existing concerns over the stability of Africa's cobalt supply. Continued tightness in cobalt raw material availability in the physical market have pushed cobalt prices to rally on the LME between July the 29th to August the 4th. Prices appear to be stabilizing, with cobalt cash price at $33,066 on August the 14th. This slide shows changes in lithium cobalt financing flows between 2016 and July of this year. All charts on this slide reflect financing raised by junior and intermediate mining companies with an annual revenue of $500 million or less. Lithium financing raised in the first 7 months of this year was only 35% of the financing raised a year ago, and totaled $302 million. Of this, $225 million came from Livent Corporation's senior debt offering. So cobalt financing is much smaller than lithium, but has performed on par with lithium despite not having any substantially large single offerings. Cobalt financing raised in the first 7 months was 33% of financing raised a year ago. The relatively strong cobalt price performance we saw in the last slide gave support to cobalt financing this year. Financing outlook for the rest of the year will be closely linked to metals price performances. We expect the quarterly lithium price to decline in the third quarter before improving slightly in the fourth quarter from stronger performances of China's plug-in vehicle sales and as lithium inventories are drawn down. We forecast persistent oversupply in the lithium market between 2020 to 2024 on an annualized basis due to strong project pipeline, which is likely to push the carbonate price to trade in the low and narrow range between $7,840 to $8,450. We expect lithium financing to remain low in 2020 and beyond, as prices remain relatively low, which will weigh on profitability in the sector and discourage new entrants. Lithium prices are unlikely to be boosted until the aggregate supply reduction is sufficient to wipe out excess supply. Beyond 2020, leading incumbent lithium producers are likely to dominate supply increases, mainly through expanding production at their current operations, which many already have plans for, and are also due to the difficulties for smaller companies to raise financing in a low-price environment. We saw in the last slide that a large incumbent producer, Livent, accounted for 75% of all lithium financing raised in the first 7 months of this year. For cobalt, we forecast the average quarterly cobalt price to continue declining in the third quarter before the price recovers to $13.5 per pound in the fourth quarter. This third quarter price estimate takes into account of the recent cobalt price rally, but we believe the price rally reflects transitory short-term tightnesses, which will be corrected once logistic bottlenecks are alleviated. The price recovery in the fourth quarter is forecast to be driven by underlying fundamentals, such as the surge in China's plug-in vehicles market. We expect the annualized cobalt price to decline this year due to lower demand, but the cobalt price is expected to recover from 2021 and to sustain above $20 per pound from 2022 onwards to support supply increases. From now until 2023, the cobalt market will only balance if supply increases in line with currently announced plans and timeframes. These include continued mine ramp-up at Kamoto, Matago LTR, production resumption at Mutanda expected in 2022, and operation startup at Musuni, the Idaho Cobalt Project, and Scone Mine. By 2024, currently known supply plans will be insufficient to keep up with demand increases, and we expect cobalt metal price to spike to $23.5 per pound in 2024 as the market swings into deficit. Higher prices will boost cobalt financing, which will be needed to meet future demand needs. We've reached the end of my presentation. Thank you for your time. If you'd like to gain further insights into our metals and mining coverage, please visit the website indicated here.
네, 알리스 윤님 발표 잘 들었습니다. 감사드립니다. 전 세계 전기차 시장 현황과 리튬, 그리고 코발트의 수급 현황, 그리고 향후 가격 전망 등에 대한 이야기를 상세하게 진행해 주셨는데요. 올해 리튬 및 코발트 수급 현황이 불안정하고 3분기까지 가격 약세가 예상된다고 말씀을 해주신 반면에 또 중장기적인 측면에서는 안정화된다고 하니 그날이 빨리 오기를 기원해 보겠습니다. 발표를 들으면서 여러분께서 질문을 하실 것으로 예상되는 내용 저희가 한 가지 준비를 해보았습니다. 중국 이외의 리튬 이온 공급망 다양화에 대한 논의가 많이 되고 있는 사실입니다. 이와 관련해서 알리스 유님의 코멘트를 저희가 사전에 받았는데요. 여러분 영상으로 함께 보시겠습니다.
This issue is very complex. Governments of top lithium raw material producing countries, including Chile and Australia, have tried to add value by going downstream, while top plug-in vehicle markets, such as Europe, are promoting greater degrees of battery raw material self-sufficiency. In the upstream, there has been limited real progress, as Chile's attempt to build downstream battery capacity did not materialize, and capex overruns have led to construction delays and stoppages at lithium refineries in Australia and Canada. A decline in lithium financing also raises doubt as to whether there will be sufficient funding available to develop lithium projects in newer jurisdictions, especially for smaller players. While there has been limited progress in the diversification of the lithium upstream, there have been increasing investments in battery capacity for automotive in the US and Europe in particular, from the likes of CTL, Samsung SDI, SK Innovation, and LG Chem. The issue will be which battery components the intended battery plant needs to import, and if these materials could be substituted with cost-competitive, good quality local supply. Developing secondary supply of battery raw materials is also a strong option for early adopters of plug-in vehicle markets to establish localized supply and ensure greater raw material self-sufficiency through a circular economy, a direction the European Union is actively promoting. At the same time, we also see companies in the EV supply chain continue to invest in building production bases in China. U.S. headquartered lithium producer Albemarle acquired lithium refinery capacity in China back in 2017 and has since expanded capacity. International car makers such as Tesla and Volkswagen are also leading the charge in capturing the growth in China's plug-in vehicles market by offering tailored, localized models, localized production, deepening collaboration with Chinese partners, and even acquiring local value chain players. As the electrification of the car fleet is here to stay, this will give more time for the supply chain to potentially accommodate localized production where feasible and economical, driven primarily by global operators and owners.
네, 답변 감사합니다. 혹시 더 궁금하신 사항이 있으신 분들께서는 실시간 댓글에 작성을 해주시거나 해외광물자원공사로 저희가 또 연락을 해주시면 또 답변 드리도록 하겠습니다.